You ready? You got me running. Shake it, shake that. Raise your hands up. Raise them out.
Hi everyone, and welcome to the Daily Currency Call with Forex Trading Asia. Thanks for joining in, and if you are back from yesterday, thanks for joining in again as well. So just a quick little recap. It is episode 410, and it is the 3rd of November. And if it is the first time that you're joining us, watching it on YouTube and not live, just remember there is a link in the description section to join the LCMS Traders Club if you'd like to watch this call live and actually get up-to-date information exactly at 11 a.m. GMT plus 8, because we do delay the release of this video on YouTube by several hours as well. So just to get started, quick introduction as usual. And if you are new, thanks for joining us as well. So we do the currency call every Monday to Friday at 11 a.m. GMT plus 8. And we analyze the currencies as follows. So on Monday, we do the Aussie and Kiwi. Tuesday, we do the Euro. Wednesday, we do the Pound. Thursday, Yen and Gold. Friday, CAD and Crypto. And again, this currency call goes through the market economic updates, the key support and resistance levels. We discuss trade ideas and much more. And much more includes Kim Hong today, who will be quite busy. There's a lot going on as well. So really important to definitely probably watch this call again on the YouTube channel later in the day, just to remind yourself of everything to pay attention to. And also this currency call will be beneficial to both the long-term investors and the short-term traders as well. We have a diverse group of traders in the LCMS Traders Club as well. And we also discuss in regards to what could move prices and the possible trade ideas. We also discuss the potential targets and also risks as well. Finally, a disclaimer. So any information shared during this session is not intended to be a trade recommendation. It is solely the views and opinions of the speaker. So please remember to do your own analysis prior to entering any trades. So to kick us off today for Wednesday, we've got 3 key points to discuss with Kim Hong, currency strategist at LCMS Traders. He'll start off with a little recap of the RBA, OPEC Plus meeting, and was it the Bank of England as well, to discuss Kim Hong, among other things, of course.
All right, thank you, Scott. Okay, let's move on to the first item, RBA. So as mentioned yesterday, well, they actually held interest rate unchanged at 0.1%. Okay, quantitative easing will proceed at a rate of 4 billion Australian dollars a week. All right. However, there was a third point. Let me share my screen. Over here. All right. So the board decided to discontinue the target of 10 basis points for the April 2024 Australian government bond. Okay, so the thing about this, not sure how many of you have heard of this before. Okay, it's what they call the YCC, the yield curve control. Okay, so the Reserve Bank of Australia, okay, for this 3-year Australian government bond, okay, has been they have been targeting, well, trying to target, okay, the yield of this bond at 0.1%, all right, is actually part of the whole monetary policy configuration, okay? So they've been doing it for quite some time already, all right? And it has proven to be helpful in the past, okay, until recently, all right? So they decided to discontinue it, quoting that, let me get the point, over here. The decision to continue the yield target reflects the improvement in the economy and the earlier than expected progress towards the inflation target, okay? Which is why they decide to, you know what, let's just end this whole yield curve control mechanics, all right? And just proceed on with what we have at the moment, which is the quantitative easing and the low interest rates, okay? So, okay, something to take note here is and the earlier than expected progress towards the inflation target. You guys have to be careful with this part over here because it's a bit of a language issue, all right? So what they're trying to say here is progress towards the inflation target, okay, has come earlier than expected, all right? Doesn't mean that they have already hit the inflation targets, okay? Because previously, Philip Lowe has been mentioning over here as well. This will not increase. Okay, the board will not increase the cash rate until actual inflation is sustainably achieved within the 2 to 3% target range. Okay, so yeah, just because they are making progress, earlier progress towards their inflation target doesn't mean that they have already hit the target. Okay, so that actually brings me to the next point. All right. Oh, by the way, the ending of the whole yield curve control is actually considered to be a hawkish move. All right, it's considered to be a hawkish move. One key point, okay, one vital point I would say, okay, related to interest rates is this. So the board will not increase, the cash rate until actual inflation is sustainably achieved within 2 to 3% targets. Okay, so when will it happen? Right? Okay, over here it says this is likely to take some time. Okay, the board is prepared to be patient with the central forecast being for underlying inflation to be no higher than 2.5% at the end of 2023. Okay, at the end of 2023. Now, in previous statement, all right, let me show you the previous statement. Now, this was a statement released in August. Okay, let me just go to October. All right, 5th of October. Okay, so in the previous statement, okay, if you guys remember, I actually highlighted this part. The central scenario for the economy is that this condition will not be met before 2024. Okay, you guys see that there's actually a change, a revision in this statement, right? Previously, the central bank is not expecting the inflation target to be met before 2024, okay, which implies no interest rates hike before 2024, okay. Now, this time around, that statement is no longer around. Okay, it has been replaced with the central forecast being for underlying inflation to be no higher than 2.5% at the end of 2023. So we are actually seeing a earlier than expected projection, okay, coming from the Reserve Bank of Australia, okay, which is a good thing. Now, this will imply that there is a possibility of an interest rate hike to take place in 2023. Okay, once again, this is a very hawkish amendments, I would say, a hawkish tone sent out by the central bank. Okay, so one last point. All right, so that was the second point. One last point I would like to highlight is this. Okay, 2nd November, make sure I get the right statement. It's about economic projections, okay, quarterly economic projections. Now, let's start off with GDP. The central forecast is for GDP growth of 3% over 2021, 5.5%, and 2.5% over the following 2 years, which is 2022 and 2023. Okay. Now, as compared to the previous forecast back in August, okay, for 2021, you know what? Forget about 2021. Okay, we are just 2 months away from the end, right? So it's pretty much have less impact as compared to 2022 and 2023. All right. So for 2022, in the previous forecast, it was a little over 4%. Okay, that's what they state in the previous statement, a little over 4%. And right now, they're actually forecasting 5.5%. Okay, which is good, right? And as for 2023, all right, previously they were actually looking at 2.5%. Right now, they are actually looking at 2.5% as well, unchanged. Okay, so that's for economic growth, GDP in Australia. Okay, overall positive upwards revision. Okay, now moving on to inflation, or maybe should I just go to unemployment first? All right. Okay, so for 2022, the projected unemployment rate is actually 4.25%. Previous forecast was also 4.25%, so no change. And then for the year of 2023 is actually 4%. Previous forecast shows 4%. So no change for unemployment. All right. So neutral stands over there. Okay. Now moving on to inflation. CPI. Okay, over here. We see that the central forecast, okay, is actually 2.25% for 2021 and 2022, okay? But for the previous projection, okay, inflation targets, okay, the inflation projection for 2022 was actually 1.75%, okay? That means the central bank is now expecting a 0.5% higher inflation coming in for 2022, all right? And as for 2023, okay, they are expecting 2.5%, okay? But the previous forecast actually shows 2.25%, okay? Once again, that's actually a positive upwards revision to the inflation projection. So all in all, okay, I would say that the quarterly economic projections is very positive, okay? So we have the ending of the yield curve control, which is good. The possibility of an earlier rate hike, which is also good, okay? And an overall upwards positive revision for the economic projections in the near future, which is good, right? All 3 points that I mentioned are all good. But if you guys actually traded or at least look at the charts for Australian dollar, or Australian versus any currency, any major currency pairs, you would have realized that the Aussie actually weakened, right? So you guys will be wondering, why is that the case, right? I mean, hawkish tone coming from the RBA, why is it that the Australian dollar actually weakened? I believe that this is also mentioned by many of the market analysts out there, is that this is just a classic, classic textbook priced in example, okay, scenario coming from the Australian dollar, okay? Because if I were to show you the chart, all right, I only have the one on the left is the Australian dollar, and the one on the right is Australian yen. Okay, so if you were to look at the other charts as well, they pretty much have a similar, I would say, move. Okay, so this is on a daily. Should I change to H4? Let me see if it works. Okay, I'll just change my charts to H4. Okay, so as you can see, 1, 2, 3. So these two charts are actually showing 3 weeks worth of prices. Okay, 3 weeks worth of prices, and I can see that there's actually an upwards movement of Aussie dollar and the Aussie yen as well. Okay, so I think it was back in 22nd or somewhere around the end of October. Okay, the 3rd week of October. Okay, that the RBA actually carried out, if you guys remember, a purchase of the 1 billion Australian dollars worth of the Australian government bonds. Okay, so that actually led to the strengthening of the Australian dollar. Okay, I believe at that time, okay, the market was actually suspecting something was going on, right? Something, which is why right after they actually did that unscheduled purchase, okay, of the government bonds, the market was actually saying like, will the RBA actually end its YCC, its yield curve control mechanics, okay, in the monetary policy? So yeah, personally, this is just, I believe this is just a typical classic example of, priced in kind of a scenario coming from the this whole purchase of the government bonds by the RBA. Okay, so yeah, if you guys are wondering why it weakens, like out of nowhere, that's probably the reason why. Okay, and also take note that if you were to look at daily chart, okay, for both charts, we can see that the Australian dollar is actually trading at a very high level against the US dollar and the Japanese yen. Okay, I believe that will be the case for the Swiss francs as well, and probably other currencies as well. Okay, so with that, yeah, personally, my view on the Australian dollar right now is I have a bullish sentiment for the Australian dollar. Okay, so yeah, so as of right now, I would look to buy the Australian dollar, okay, but definitely not against the US dollar, okay, knowing that the FOMC is coming up, okay, definitely not against the Japanese yen as well, okay, because, like I mentioned earlier, they are actually trading at, wow, such a high level, okay. I will really need a stronger conviction in order to buy against the other currencies. So personally, I would say, you should just stay out of the Australian dollar for the time being, okay. It's too high to buy, and it's not so fundamentally correct to sell, okay, unless you guys are looking for a short-term retracement kind of what do you call that, pullback kind of a trades, like I think one of the club members was mentioning in the EcoFin platform yesterday, okay, so we were having some chat on how he made how much money on pound yen and things like that, but it was actually sort of like a pullback trade, okay. So with that, that's all I have to share for the Aussie RBA meeting, okay. The next time they will be meeting is on 7th of December, okay. I'll update you guys again on what to look for during the next meeting, okay. Now, let me move on to the next item, which is the OPEC Plus. So, as usual, the OPEC Plus will be meeting at an unscheduled time. Well, I wouldn't say unscheduled, but unannounced timing, okay, tomorrow, right? So what to look forward to? Personally, I don't think, we can look forward to much, all right, except that they are likely going to hold production hike unchanged at 400,000 barrels per day for the month of December, okay? Despite having many pressures, to actually increase production further, it is unlikely that they are going to be influenced by those pressures, okay? I think there was a couple of countries, OPEC members, okay? I think it was Nigeria and Angola, okay? I read somewhere that they are actually producing, at the moment, they are actually producing lower than the agreed production level, okay? So, for all the members in the OPEC Plus, they actually have an agreed production level. So by right, they are not allowed to exceed that level of production, okay? So let's say, for example, for Nigeria and Angola, they are allowed to produce, say, 100,000 barrels a day, all right? From what I know is that recently they have been, falling short of that level, okay? So as expected, okay, those two countries and probably some other members as well, okay, who are falling short from their production level, may actually vote against an increase in in production hike, okay, because it's not going to do them any good, right? If right now they can't even produce 100,000 barrels per day, by increasing, the quota from 100 to 150, it's not going to do them any good, right? And bear in mind that with the increase in production supply, okay, with the increase in production, we can actually expect oil prices to decline, right? Because as supply increase, with the whole demand, with demand holding unchanged, we can actually expect a decline in prices, okay? Econs 101, all right? So, the decline in price is just going to have a negative impact on Nigeria and Angola's production, right? Because that will mean lower income for their countries, okay? So, yeah, unlikely we're going to see any change in production hike, okay? So what impact is it going to have on oil prices, all right? As I mentioned previously, there are many, many reasons for an increase in oil demand in the near future, okay? Especially winter is coming, okay? Winter is coming. So, we have heard from China that, they're actually, encouraging their whole energy companies, Chinese energy companies, to actually secure as much energy oil as possible, okay? So that will definitely lead to an increase in demand of oil. And of course, with the opening up of the global economy, okay, opening up the global economy, and with all the VTL travel lanes and things like that between countries, expect the oil demand to increase, okay? And if the OPEC Plus is not going to catch up on their supply, okay, then that will, likely lead to more upward pressures on prices, aka an increase in oil prices, or at least, okay, sustaining at this current 70 over $80 per barrel kind of price levels, okay. And that, okay, with that increase in oil prices, it will actually translate to direct strengthening of the Canadian dollar, okay. So if you guys trade CAD, just pay attention to the OPEC Plus meeting and see what they have decided to do and what not to do and things like that, all right, because that will have an impact on the Canadian dollar. Okay, so with that, I will update you guys again on what they decide to do or not to do on Friday. Okay, so let me move on to the last item on the list.
Kim Hong, before you move on into the last item, the Bank of England, the plan was to talk about the Bank of England's rates decision and possible trade ideas, but I'm going to be talking about that shortly.
Okay.
So what we'll do is tomorrow, just to update everyone as well, tomorrow is a public holiday in Singapore, so we won't be running the currency call. And Kim Hong, can we do a recording of your thoughts on the Bank of England, and then we'll publish it tomorrow in the club channel? Would that work for you?
It will work for me, but I need to see if, okay, if everyone have no comments on this, I'm okay with it, because the thing is, they'll be meeting tomorrow, so I just thought we can talk about it today to give everyone some more time to prepare for the Bank of England. What do you guys think?
We think we will do it tomorrow. I think on behalf of everyone that we'll do it tomorrow. So check back, if you're not already a club member, those of you watching this on YouTube channel, the updates from Kim Hong about the Bank of England will be uploaded onto the club channel. It will not be made available to the free viewing in the YouTube channel. So make sure you check back into the club. If you haven't already joined the club, then the links are there. The links will be in the comments in YouTube as well. Make sure you join into the club so that you get that insight. We were just talking about this, possibly that 100 over pip, 200 pip trade ideas to be had with the Bank of England's analysis. So
exclusive contents. So
exactly. Exactly.
Okay, so if that's the case, I may actually do a recording today or tomorrow and just do it ASAP and just put it on the club. Okay. Let me see if there's any question from our audience. Is it another case of buy the rumor, sell the news? Yes, Suyun, this is actually pretty much the case that we are witnessing for the Australian, the RBA's decision. Okay. Your trade idea on AJ yesterday is sell. Okay, yes. So originally the AJ trade idea, it was actually a buy or sell. Okay, so I have both buy stop and sell stop being set. Okay, so it turns out that the market actually moved Aussie and downwards, right? So the Aussie sell stop order was triggered. So to answer your question, yes, it is actually a sell trade. Any more questions? Okay, no questions for now. So you guys can just look forward to the BOE video that I'll be posting probably today or tomorrow. Okay, so with that, I will hand it over to Scott.
And before we get to Scott, sorry, I'm all about interrupting everyone today. So as I interrupt Scott, just something to share with everyone. I was just looking at this. It just came up. So look at that. Ecofin Financial Community Awards 2021 winners. And for those of you who voted for us, we have just came as the best educational community LCMS Traders Club. So thank you all for everyone who voted. We should be looking at a few more posts about that. We do have a very flashy little thing to post up, and also a trophy that we should be receiving anytime now. So thank you for everyone who voted. Those of you who didn't vote, thank you all for that as well. So if you haven't already joined the club, make sure you get on board. We are the best educational community out there. Now, done with the interruption, you can have it back, Scott.
What I don't know if that's appropriate, but that was a fair point to come in on. So that's great news, and thanks guys for supporting. Now, All right, so that was a lot of detail. I'm just going to go into the US dollar index here. And the immediate thing that I've noticed on the 4-hour time frame is that we've already got a little bit of buying interest present, pardon me, leading into what we've discussed in the previous episodes this week about the FOMC tomorrow morning, very early, 2 a.m. It all starts GMT +8, and then NFP Friday evening. So really make sure that you, number one, join the club to actually get reminders, because it's very easy to forget about certain things and you might just jump into a trade, and that is, you know, the trade might look good, but the timing's off. So make sure you do that. Now, in regards to the news, there's not really a lot of news out today for Wednesday, this time zone, in particular for the US. So you just want to, really the main event is going to be the FOMC. So there is a little bit out there, but just be focused on, really how the US dollar reacts to that. Don't jump in immediately. And if you have hesitations, just wait for the daily candle to close and then sort of go from there. But make sure if you can't trade those lower time frame setups, you check out, Kim Hong does have his trade ideas that he's sharing as well. And I, will share some thoughts as well on things. So make sure you ask questions, but you just want to be prepared and make sure you catch up on everything. We do post the videos as well with the timestamp, so catch up on that. But frankly, there is, more upside potential here on the US dollar. So if you're, trading the Aussie, trading the Euro, definitely sort of, you want to pay attention to what is mentioned. And again, there'll be a recap, obviously, on Friday as well about how it all played out with the FOMC and exactly what was mentioned. So pay attention to that. But as you can see, there's not a lot of big moves on the US dollar index, but there's still opportunities present on the other pairs. You've just got to be a little bit careful. There is some news coming out as well tonight as well, just to give us a bit of an insight into how the workforce is headed into the lead up to what should be hopefully some clarity from the Federal Reserve as well, especially that NFP number, if that can come in much better than last month as well. So I'd stay tuned for that, and really more updates come later in the session as well for tonight. So, keep the EchoFin platform logged in, you'll get the notifications, and then we'll have to wait and see how it all plays out. But those are my thoughts on the index. More upside here. Just be patient, because you never know what happens. So don't preempt and jump in, and especially if you're using some size as well. So be cautious, are my thoughts on the US dollar index. Now, up next, we do have Jen. There is a bit to talk about the Bank of England. We do have the pound in focus as well, and that is really good news about the win there. I forgot about that because we got everyone to vote. So thank you guys again for voting. But over to you now, Jen, with the pound.
All righty. With all that said, what more can I say about the pound dollar Bank of England news to be released? I'm actually going to keep it really short and sharp. I think it's a straightforward analysis on the pound dollar. We're done with that one. Here we go. So on the forextradingasia.com economic calendar here, we are on Wednesday. We had all our news released already. That's why you saw some movements in the New Zealand dollar there. But the focus for the pound dollar, we have some services PMI numbers, no change there for today. The US dollar, Scott was just sharing with you already. The main thing is on Thursday, where the Bank of England's votes to be released for interest rates. I do have the view that is likely to stay as expected, so at a 0.1%. There has been chatter. I was debating with Kim Hong, I was twisting his arm. He says that it's going to increase. I say that it might hold. We had our debates here before the call. Wouldn't you love to hear what we were talking about? But I view that interest rates is going to hold at 0.1%. The vote is likely to be at, as they had expected, with three members voting for a hike, but 6 voting for no change. that is actually crucially important because just the sentiment of 3 members voting to hike interest rates could push the pound dollar quite high, to bring that positivity, to bring that optimism into further rate hikes or to rate hikes, not at this meeting, but possibly into the next meeting. So I don't think we're going to see an action this time. We're going to see some change in sentiment this time around from the Bank of England, and then we could see some big price movements in the pound dollar. So quite straightforward here, I feel, from my view, or in terms of the trade ideas there. And then on Friday, we have some more pound news, but not going to move prices too much. And then the non-farm payrolls, which I'll tell you about on Friday. So what this all could mean in terms of the pound dollar, looking at the charts here, this is the pound dollar on the H4 time frame. It has tested that 1.3584 level. It's come very close to that point, about 20 pips away. Right now, it looks like it's bouncing back up. I am looking for buying opportunities on the pound dollar, driven by the Bank of England's possible, well, no rate decision or possible rate decision of holding, but that sentiment or that positive sentiment with the votes or some votes for rate hikes. So what you could be looking for here, a little bit early, I would say leave it till tomorrow, but a little bit early now is you could be looking for buying opportunities up towards that 137.47 resistance level. So that's a good 110 pips up towards the upside. If you did buy now, you could have a stop loss about 50 pips. You're still looking at a 1:2 risk-reward ratio towards that upside of that resistance level there. So why I haven't drawn it all the way to the end is that this is a Thursday news. I think that we could see some more volatility with the non-farm payroll. So I think that trading it all the way to Thursday evening for the Bank of England's rates decision or voting is quite credible there, quite possible there. So you are looking at about above, I think be a bit safer and say that above 1.3640, you could be looking at a 60 pip stop loss for a 100 pip take profit level, almost a 1:2 risk-reward ratio towards the upside. I do think that if we do see that strong sentiment coming from the Bank of England, we might even see it break above this resistance and possibly towards that 1.3870. But that looks like a bit of a stretch at this point. That could be your first trade. Your second trade could be a very quick one towards that upside there. But one at a time, look for that one before the next trade or through the Bank of England's rate decision. But then as we approach the non-farm payrolls on Friday, remember to reset that, possibly close out your trades if you have any running, because I think non-farm payrolls this month might be a little bit tricky. I think we might see some good numbers coming from the US, which could bring it all back down again, trading within that big range there for the pound dollar. If the pound dollar does shoot up towards that 1.3747 resistance, then that could actually make my euro pound analysis from yesterday come true and also become a really nice trade as we see it test above and possibly come back down from this 8497 resistance level. I'm looking for it to break below, driven by that upward move in the pound dollar and also possibly with the euro pound getting resisted by 1.16 turning back down. We could see the euro pound as a very nice trade below 8489. You could be looking at a 60 pip take profit level, a very tight 30 pip stop loss, a 1:2 risk-reward ratio towards the downside. So as I've been telling you through the week already, keep your trades short to medium term, realize your profits quickly because we do have a lot of big hard hitting impact news for this week, a lot of trading opportunities. So don't try to overrun any trades there. get in, make some money, get out, get onto the next trade with the news release. So with that, I will pass it back to you, Scott.
Thanks for that, Jen. And I have shared the trade ideas as well in the euro and pound discussion section as well, guys. So make sure as well that you do sign up with the link in the description if you're watching this on YouTube a little bit later in the day as well. And I've shared the Forex Briefcase website link. That's for the managed account option. If you are someone that's looking to diversify investments, check it out, leave your details, and we'll get in touch. But that is it, guys. Thanks for watching, and we'll see everyone on Friday. And good luck as well. And make sure you ask questions in the EchoFin group. Bye, guys. Have a great day.